Hello and welcome to a new video of FMTTM Future of Finance. In today's video, we're going to discuss the stock crash of Tesla. We will first provide an overview of the company, its history, and its impact on the electric car market. Next, we will examine the company's recent growth and expansion in key markets such as China and Europe. Finally, we will explore some possible reasons for the stock's crashing. Before we get into stock crash of Tesla, I just want to take a moment to remind you that investing always carries some level of risk, and it's important to do your own research and consult with a financial professional before making any investment decisions. This video is for educational purposes only and is not intended to be investment advice. Now before we start with why the share crashed, first we go a little deeper into Tesla. Tesla is a leading producer of electric cars and energy storage systems, founded in 2003 by entrepreneur Elon Musk. The company has been at the forefront of the electric car revolution and has played a major role in popularizing the technology, bringing electric cars to the mainstream consciousness. With a market capitalization of over $800 billion, Tesla is currently the world's most valuable automaker. Tesla's mission is to accelerate the world's transition to sustainable energy. They design, develop, manufacture, and sell high-performance fully electric vehicles and energy storage products. Tesla's vehicles are unique in the industry for their exceptional performance, design, and technology. The company's flagship electric car, the Model S, was the first vehicle to receive a perfect score in Consumer Reports' road test, and the Model 3 was the best-selling electric car in the world for several years in a row. Tesla is also a leader in the field of renewable energy, with its solar products and energy storage systems, which allows customers to generate, store, and consume energy entirely from sustainable sources. The company has also been actively involved in building and maintaining charging infrastructure, making it easier for customers to charge their electric cars. In addition to its innovation in the electric car and renewable energy, Tesla is also known for its unique corporate culture and leadership. Elon Musk, the company's founder and CEO, is known for his ambitious vision and ambitious goals, which has attracted a loyal following of investors and customers. With his leadership, Tesla has grown to become one of the most valuable companies in the world and has changed the way people think about electric cars and renewable energy. In recent years, Tesla has experienced rapid growth in several key markets around the world. One of the most significant markets for the company has been China, where Tesla has built a large factory in Shanghai and has seen a significant increase in sales. The Chinese market has been a key driver of the company's growth, and Tesla has become one of the most popular electric car brands in the country. Another important market for Tesla has been Europe, where the company has also built a factory and seen a significant increase in sales. The European market has been a key driver of the company's growth, and Tesla has become one of the most popular electric car brands in the region. Tesla has also been expanding its presence in other markets worldwide, building new factories and increasing production capacity to meet the growing demand for electric vehicles. The company's investment in its manufacturing infrastructure has been a key factor in its ability to increase production and meet the growing demand for its cars. The company's growth has also been reflected in its financial performance, with revenues increasing significantly in recent years. This has been driven by the growing popularity of electric vehicles and the success of Tesla's products in key markets such as China and Europe. Overall, Tesla's growth in recent years has been driven by the increasing demand for electric vehicles and the company's ability to expand its presence in key markets around the world. The company's investment in manufacturing infrastructure has been a key factor in its ability to increase production and meet the growing demand for its cars. Despite its growth and success in key markets, the stock of Tesla has recently experienced a significant crash. There are several possible reasons for this crash. The first one is, the stock market as a whole is heading to a possible recession. This can have a significant impact on the stock market as a whole. First, what is a recession? A recession is a period of economic decline characterized by a fall in gross domestic product, also known as GDP, rising unemployment, and a decline in consumer spending. During a recession, companies, such as Tesla, may experience a decline in revenue and profits, which can lead to a decline in their stock prices. In the case of a recession, investors may become more cautious and start to sell stocks, leading to a decline in stock prices across different sectors, including Tesla. This can also lead to a decline in consumer spending on luxury items such as electric vehicles, which could negatively impact Tesla's sales and revenue, leading to a decline in its stock price. Additionally, A recession could also result in increase in unemployment, which also results in a decline of consumer spending. This could affect the demand for Tesla's vehicles, negatively impacting the stock price. A second reason is the disappointing results in car sales. Tesla's car sales did not meet expectations, indicating that the demand for Tesla's products was not as strong as the Tesla had hoped. This has led to concerns about the company's future revenue and profits, which in turn has resulted in a crash in the company's stock price. Next to that, the recent decision by Tesla's CEO, Elon Musk, to sell a significant portion of his stock in the company raised concerns among investors about the future of the company and its leadership. This also led to a decline in investor confidence and a drop in the company's stock price. Additionally, the recent statements and actions of Elon Musk have also been a source of concern among investors, which has led to a decline in investor confidence and has negatively affected the stock price. For instance, in recent months, Elon Musk has made tweets and comments that have been considered erratic and unpredictable, which has led to a decline in investor confidence in the company's leadership, and in turn, has negatively impacted the stock price. The last reason is that more and more companies are entering the electric vehicle market. One of the biggest challenges for Tesla has been the growing market share of Chinese electric car companies. Chinese electric car companies such as NIO, Li Auto, and Xpeng have been gaining market share and are becoming increasingly competitive with Tesla. These companies have been able to offer similar features and technology as Tesla at a lower price point, making them a more attractive option for consumers. This increased competition from Chinese electric car companies has led to a decline in Tesla's stock price as investors worry about the company's ability to compete in the long term. This competition has also led to a decline in the company's market share and raised concerns among investors about the future of the company. In conclusion, Tesla is a leader in the electric car market and has seen significant growth in recent years. However, the stock of Tesla has recently experienced a crash for several reasons, including economic conditions, disappointing results in car sales, and changes in investor confidence in the leadership of Tesla's CEO Elon Musk. Thanks for watching. Invest safe, and if you found this video helpful, don't forget to like and subscribe to our channel. And if you have any questions or topics you'd like us to cover in the future, let us know in the comments.